network's medium of bringing the happenings in the economic sector of society to our discerning viewers. This program is aimed at bringing to the doorstep of our viewers the business, financial, and economic activities from all strata of society. Its deliveries are centered through the various stock exchanges across the world, news about government economic activities, private sector business activities laced with expert opinions, stakeholders analysis, and correspondence reports. We'll go on a short break. When we are back, we'll reel out the details. Just stay tuned.
Corruption not in my country.
Driver, why you just the jack us up and down like this? Now,
I hope nobody got it. Hello.
Why you are? Let's go.
Because this road where they see, so you no guarantee safe delivery.
We just dey vote for government, but we not get good governance.
At all.
Road so e no dey, light o usa, the infrastructure nko e come turn to be forbidden fruit for the city.
Corruption, spoil everything.
The headlines. NLNG reports progress on Train 7 gas projects. Tax waivers fees net 9 billion naira. In the Asian markets, shares down as China's factory output slows. European stocks volatile, CAC 40 marginally high. By the end of this show, you can be rest assured of being informed accurately of financial activities around the world. I am your host for today, Susan Abbey. And now the news in details. Nigeria LNG Limited announced significant progress in the Train 7 gas project located on Bonny Island, River State, confirming that construction has reached 67% completion. This milestone underscores NLNG's commitment to advancing economic growth through the successful execution of the project. According to Andy Ode, General Manager of External Relations and Sustainable Development at NLNG, the initiative has already begun to yield economic benefits, with over 9,000 Nigerians employed directly on Bonny Island and a substantial number of indirect jobs and business opportunities emerging from the project. Ode further stated that NLNG officials recently provided detailed updates to a joint committee of the Senate and House of Representatives on gas, addressing concerns and clarifying the project's status. The company highlighted the project's significant achievement of over 45 million man-hours without by any lost time injury, underscoring its commitment to safety and efficiency. The Train 7 project represents a pivotal strategic initiative aimed at diversifying Nigeria's revenue sources, particularly crucial during the global energy transition towards achieving net zero emissions. NLNG emphasized its role in monetizing Nigeria's abundant natural gas reserves, estimated at over 200 trillion cubic feet, thereby supporting the nation's energy security and economic growth. NLNG underscored the project's alignment with the federal government's Decade of Gas initiative, emphasizing its contribution to national gas development goals. The company expressed its dedication to collaborating with National Assembly and all stakeholders to ensure a conducive environment for the project's successful completion and to attract further transformative investments to Nigeria. The Train 7 expansion is expected to increase NLNG's production capacity by 35% from 22 million tons per annum to 30 million tons per annum upon completion. The project, which received final investment approval in December 2019 and commenced construction in June 2021, is anticipated to drive substantial investments across the LNG value chain, enhancing Nigeria's attractiveness to foreign investors and bolstering its foreign direct investment profile. Dangote Sugar Refinery has recently completed the issuance of Series 4 and 5 commercial paper notes, raising a total of 42.79 billion naira. This announcement, detailed in a filing with the Nigerian Exchange Limited and signed by Company Secretary Temitope Hassan, marks a significant step under its 150 billion naira commercial paper issuance program. Hassan explained that the issuance included 12.93 billion naira of 181-day Series 4 notes and 29.886 billion naira of 265-day Series 5 notes, attracting considerable interest from various investor categories such as pension and non-pension asset managers, institutional investors, and individuals. The Series 4 notes were priced to yield 23.00%, while the Series 5 notes were set at 25.00% yield. According to Hassan, the successful issuance underscores Dangote Sugar Refinery's strategic initiative to diversify its funding sources. The funds raised from this offering are intended to bolster the company's short-term working capital and support its funding requirements. He expressed appreciation for the robust participation from investors, highlighting their confidence in the company's business model and growth prospects. The move aligns with Dangote Sugar Refinery's broader strategy to strengthen financial flexibility and meet operational needs through varied funding avenues, demonstrating its proactive approach in navigating economic conditions and sustaining growth momentum. Fidelity Bank PLC is set to initiate a capital raise amounting to 127.1 billion naira through a combination of a public offer and rights issue, scheduled to commence on June 20, 2024. This move comes in response to the Central Bank of Nigeria's directive for commercial banks to bolster their capital bases in preparation for the country's economic ambitions. The bank aims to secure 97.5 billion naira through the public offer and 29.6 billion naira via the rights issue, which grants existing shareholders the opportunity to acquire one new ordinary share for every 10 held, priced at 9.25 naira per share. The public offer will make 10 billion naira ordinary shares available to the general public at 9.75 naira per share. Both the rights issue and public offer are slated to conclude on July 29, 2024. Stanbic IBTC Capital is leading the issuance process, supported by a consortium including Ion Global Markets Limited, Kari Asset Management Limited, Afrinvest Capital Limited, FSL Securities Limited, Future View Financial Service Limited, and Iroko Capital Markets. To provide comprehensive details and engage with potential investors, Fidelity Bank plans to conduct a facts behind the offer presentation at the Nigerian Exchange on June 20. This initiative underscores the bank's strategy to communicate the benefits and potential returns associated with its capital raising efforts to stakeholders. Dr. Vincent Nwani, an economist and former director of research and advocacy at the Lagos Chamber of Commerce and Industry, Nigeria, estimates that the exodus of multinationals from Nigeria over the past 5 years has led to a staggering 94 trillion naira loss in economic outputs. This figure encompasses various forms of exit strategies adopted by multinationals, including scaling down operations, transferring ownership, or outright sales of stakes. One prominent recent example includes the acquisition of Guinness Nigeria by Tolaram Group on June 11, 2024. Nwani arrived at his calculations by evaluating the valuation of these multinationals and estimating their economic impact, often citing value addition metrics ranging from 5 to 10 times their direct contributions. His analysis encompasses factors such as employment generation, salaries paid, and overall turnover within the Nigerian economy. Despite focusing on notable cases, Nwani underscored that numerous other multinational departures were considered in his comprehensive assessment. The trend of multinational exits from Nigeria has been significant, particularly highlighted by closures in sectors ranging from technology and consumer goods to manufacturing. For instance, in 2020 alone, over 10 companies ceased operations, including Standard Biscuits Nigeria Limited and Nasco Fiber Products Limited. The trend accelerated in subsequent years with notable exits such as Unilever Nigeria PLC and Procter & Gamble Nigeria in 2023, followed by Microsoft Nigeria and others in the first half of 2024. Nwani pinpointed several key factors driving these departures, notably the foreign exchange crisis, deteriorating security conditions, and chronic power supply issues leading to soaring energy costs. He emphasized the urgent need for government intervention to address these issues and mitigate further economic losses. Professor Olusegun Ajibola of Babcock University further elaborated on the economic dynamics behind multinational exits, citing the volatility of the Nigerian currency as a critical factor. He explained how fluctuations in the exchange rates could significantly devalue foreign investment over time, prompting multinationals to reconsider the operational viability in Nigeria. Despite these challenges, Ajibola remained optimistic about Nigeria's attractiveness to foreign investors, pointing out ongoing interest from companies like Toleram Group despite the broader exodus. In summary, while Nigeria continues to grapple with significant challenges affecting multinational operations, including economic instability and security concerns, stakeholders remain hopeful that strategic interventions could help reverse the tide and restore investor confidence in the country's economic potential. We are open for advert placements, bookings, and commercials. And you can connect with us and watch us on Atn socials, Facebook and YouTube, Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1, and on X, formerly Twitter, Atlantic TV Net. You can also watch us live on our website, atlanticnetwork.tv. Now to the rest of our stories. The Nigerian Investment Promotion Council, NIPC, has reported generating a total revenue of 9.2 billion naira from fees charged for granting Pioneer Status Incentives PSI to eligible companies and renewals over a span of 4 years, as revealed by correspondents. This equates to an average annual income of 2.3 billion naira from 2020 to 2023, highlighting the significant financial contribution these fees represent for the Commission. These charges aimed at facilitating tax holidays for qualifying businesses have emerged as a crucial income stream for the NIPC. The collection of these funds come at a time when there are discussions around revising and reducing the current 6 trillion naira annual value of tax waivers granted to companies operating in Nigeria. This issue has sparked debate among economic experts regarding the transparency and fairness of the federal government's approach to granting such waivers. The Pioneer Status Incentive itself is a federal government initiative designed to exempt companies from paying income tax for a defined period, typically aiming at promoting industrial growth and attracting investment into the economy. This incentive is granted under the Industrial Development Income Tax Act and offers varying levels of tax relief, usually for an initial 3-year period. Eligible entities are those introducing new products or services that are not currently available in Nigeria. According to the latest report from NIPC for the first quarter of 2024, the Commission approved fresh tax holidays for 12 companies during that period, expanding the total number of beneficiaries to 104 companies. These newly approved entities, which include companies like Fani Nigeria Limited and New Way Power Technology Company Limited, collectively invested 125.74 billion naira into their operations and production activities. Furthermore, the report detailed that 9 additional companies have received preliminary approval for PSI, contingent upon meeting specific requirements. In the same quarter, the Commission received 18 new applications for Pioneer Status Incentives and granted extensions to 2 companies seeking prolongation of their tax holidays. Financially, NIPC's revenue from these fees fluctuated over the years, starting at 3.1 billion naira in 2020, declining to 1.92 billion naira in 2021, before rebounding to 2.1 billion naira in 2022 and 2.11 billion naira in 2023. This revenue pattern underscores the varying levels of activity and investment within the sectors eligible for PSI. Looking ahead, discussions around tax reforms led by Mr. Taiwo Oyedele, chairman of the Presidential Tax Reform Committee, indicates ongoing deliberations on the future of tax incentives and waivers. He emphasized that any changes introduced through legislation would respect existing tax holidays while aiming to enhance transparency and align incentives with broader economic goals. In 2023, the Nigeria Liability Insurance Pool NLIP reported a robust 51.6% increase in gross premiums, soaring from 1.18 billion naira to 1.79 billion naira compared to the previous year. This substantial growth highlighted in the pool's annual reports was primarily driven by the revised premium rates for third-party motor insurance that took effect in January 2023. The National Insurance Commission NICOM mandated higher premiums across various categories of motor vehicles, significantly impacting the insurance landscape in Nigeria. At the 14th Annual General Meeting held in Lagos, NLIP Chairman Boyega Lacey attributed the surge in gross premiums directly to NICOM's policy adjustment. He noted that the increase in premiums led to a corresponding rise in claims expenses, which escalated by 61% from 297.3 million naira in 2022 to 478.6 million naira in 2023. This spike was primarily due to the expanded liability limits for private motor vehicles and third-party property damage, coupled with high inflation rates. Despite the heightened claims expenses, NLIP achieved an impressive underwriting surplus of 533.4 million naira in 2020, about the growth prospects for the Nigerian insurance sector, emphasizing the potential impact of rising discounts. These reforms are expected to usher in a new era of innovation and adaptability within the sector, supported by strategic initiatives and fresh perspectives from newly appointed executives across various insurance firms. The NLIP continues to play a critical role in the Nigerian insurance landscape by providing reinsurance services for third-party liabilities such as motor and general liabilities, workmen's compensation, employers' contingent liabilities, and builders and occupiers' liabilities. Overall, the Nigerian insurance industry witnessed significant growth in 2023, with gross written premiums surpassing 1 trillion naira for the first time, and total industry assets reaching 2.67 trillion naira, underlining its resilience and potential amid evolving economic conditions. Food inflation in Nigeria surged to 40.66%. 1% uptick in food prices over the year. The latest Consumer Price Index and inflation report from the National Bureau of Statistics (NBS) provides insight into these developments, highlighting that headline inflation edged up by 0.26% to 33.95% from April's 33.69%. This rise in inflation rates, reaching levels not seen since March 1996, is primarily attributed to elevated prices in food and transport sectors. The NBS report identifies key contributors to headline inflation in May 2024, including food and non-alcoholic beverages contributing 17.59%, housing, water, electricity, gas, and other fuels contributing 5.68%, and clothing and footwear contributing 2.60%. The price of food commodities has steadily climbed throughout the past year, starting from 25.25% in June and reaching 40.66% in May 2024. This escalation reflects a 15.8% diversifying the economy away. However, the partnership between the Ministry, Arise Integrated Industrial Platforms, Arise IIP, and Afrexim Bank aims to rejuvenate Nigeria's cotton, apparel, financing, and constructing and operating tailored industrial zones with high value-added capabilities. According to Afrexim, this initiative will focus in 1990s. This partnership underscores the current administration's commitment to promoting economic diversification